Stock markets around the world are crashing right now. But why? The answer lies in something called the yen carry trade, a term you'll probably hear a lot this week. So, what exactly is the yen carry trade, and why did it cause a market downturn? Let me break it down for you. It all started when the Bank of Japan, or BOJ, decided to raise interest rates at their most recent meeting. They bumped up the rates to about 0.25% in their second rate hike since 2007, officially ending their long-standing negative rate policy. For years, traders took advantage of Japan's ultra-low interest rates through something called the yen carry trade. Here's how it worked. Investors would borrow yen at these super low rates, like around negative 0.4%, and use this borrowed money as leverage. They'd convert the yen to US dollars or other currencies, effectively getting almost free margin. For years, traders took advantage of Japan's ultra-low interest rates through something called the yen carry trade. Here's how it worked. Investors would borrow yen at these super low rates, like around negative 0.4%, and use this borrowed money as leverage. They'd convert the yen to US dollars or other currencies, effectively getting almost free margin. This was possible because of the wide gap between Japan's low rates and the rapidly rising rates in the United States and other countries. But now, as the Bank of Japan starts raising rates, this carry trade is unraveling, especially since rate cuts are starting in the United States and the European Union. Imagine that you borrowed money at a low rate and invested it somewhere else where the return was high. Now, the place you borrowed from is raising its rates, and the place you invested in is lowering its rates. This makes your investment less profitable. As a result, the Japanese yen has strengthened, and the USD-JPY currency pair has hit its lowest level since December 2023. You now get 142 yen for every US dollar, compared to 160 yen just a few weeks ago. Here's the key point. As the yen strengthens, many of these yen carry trades are getting margin called. Suddenly, the era of free yen loans is ending. When these margin loans are called, the underlying assets are sold off, causing equity markets to crash. The carry trade is unwinding, and it's creating a lot of volatility in the market. Think of it like this. If you borrowed money to buy a house and the bank suddenly asked you to pay back a large part of your loan immediately, you might have to sell your house quickly to pay back the loan, which could drive down house prices in your area. The solution to this problem isn't simple and may require a separate discussion. This situation is very different from previous market downturns. For now, we're navigating through this volatile period. So there you have it, the yen carry trade explained and why it's causing global markets to crash. Stay tuned for more updates and insights. Don't forget to like, subscribe, and hit the bell icon for the latest in financial news.